Wondering what your limited company year end is and whether you should change it? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, the subject of when a company's year end actually is, so a limited company we're talking about here, it pops up all the time. And of course, the follow-on question is that okay? Is this the best year end? Should it run in line with the tax year? And the tax year in the UK runs from the 6th of April to the 5th of April for individuals and people as the owners of the limited company. And that's usually who we're talking to on this channel is owners, and so the shareholders and usually the directors of small UK limited companies. They'll ask then, okay, well, is there a benefit to aligning the two? And that's what I want to talk about in this video. Now, before we get into it, if you do like these videos, make sure to click the bell and the subscribe button below so you get notified whenever we release more just like this one. So I'm going to talk briefly about how to find your company year end, and then I'm then going to talk about whether it is a good idea to align that to the personal tax year end. And the spoiler answer is there is no best answer, but there is a lot of caveats and detail, pros and cons of why you might want to do this. And towards the end of the video, there's one particular downside I really want to touch on, and I think that's one of the key ones. So I'm going to tell you briefly about how to find your company year end, and then we're going to talk to you through the pros and the cons, the benefits and the downsides to whether you should actually change your company year end to run alongside the personal tax year. And particularly towards the end of the video, there is what for me is the key downside to doing this. And there is lots and lots of companies that do this, so it really is a bit of a toss of a coin, and there is no best answer, but I think there's a lot to consider, and we're going to cover that in this video. So then firstly, how to find your year end? Well, you'll find it on a lot of documents, but by default, when you form it with Companies House, they'll give you the month ending in the month that you formed it. Now that's a weird thing to say. So if you form it on the 10th of April, they'll by default give you the 30th of April the following year as your year end. That may sound weird because you kind of probably want to go fresh and roll it for a full 12 months. You might want to start operating on the 1st of May and run all the way through to the 1st of April. So if you want to do that, that makes sense. But to some people, they're like, well, if I started in April, surely my year end should be March, but that's just the default. Now you can change it. If you don't know for sure what your year end is, if you just type in Companies House Beta online in Google, you can search for any company you like, including your own, and it will show you their accounting year end. It will show you exactly when your accounts are made up to, they call it, and when it's going to be due. Particularly in the first year, that due date is usually different, so it's a good thing to know from the off. But do know that you can change the year end. I'm not going to talk in this one about how to change the year end, but just remember you can do it. It's normally done online, and you do need to tell the tax office about it. Think about those, keep those for later. But let's talk about then the pros and cons of whether you'd want to put it in line with the personal tax year. Now, I'd say a lot of people do this, so it's very normal to do it. And for me, the reason people do it is they like the ease of it. It makes sense to everybody. So normally what will happen is they won't make their year end the 5th of April, exactly the same as the personal tax year. They make their limited company year end the 31st of March. So it basically lines up. And the reason is ease most of the time. If you think about it as an owner, you're likely taking salary and dividends out of the company, and what's going to happen is you have to do your personal tax return. So that's quite an easy one to then figure out, okay, well that's the company's position, that's my position, here's the tax bills, let's go pay them, and everything gets filed roughly around the same time. So that's the majority of the reason why I think people just picture it easy. Now, if you're sending it to lenders like mortgage companies or investors, people that are going to look at these things in a combination, they might also find it easier. And it's not to say that third parties can't work on these things. There's tons and tons of limited companies without a 31st of March year end, loads of them. So it's definitely possible, but sometimes just for individuals, they find it easier to do. So that would be the key reason why people would do it. The other ones, things like is an easy one single point. As we said, because you're already in the zone of, okay, let's say it gets to the end of March and you've got to go prepare your accounts in April, May, June, once you've got your paperwork together, you can look at that, you can do that and your personal tax return together. You're often looking at those things together. If you work with an accountant, you might have looked at it before the year end as well, or at least they'd be thinking about it in the background and doing some planning for you, if they're the right accountant. And the idea is then you've got that single point for both that you can look at and think, okay, we all know what's going on, and that's that. And that single point of review, whether you're doing it on your own and working things out yourself or in combo with an accountant, or the accountant's doing it all for you, is a really easy thing to manage. So that again is one of the key benefits and attractions of having that aligned year end. And what I've done is I've just shown you a little brief example here, knocked up on a spreadsheet. Surprise, accountant uses a spreadsheet, just to show you, you've got your year end aligns perfectly with your company year end, give or take a few days. It's all nice and easy to see. But we will revisit it later in the video to talk about one of the main downsides to doing this. Now, because those two deadlines are aligned in terms of the company and the personal tax year end, it means actually your filing deadlines are pretty close together as well. So for a company, you're normally going to be ending up filing in December of the year. So if your year ends 31st of March, 31st of December is your normal time. First year could be different, could also be a few caveats as to why that might change, but generally that's when it's going to be. And your personal tax return, again, usually is going to be the 31st of Jan. So it's often that kind of winter time, people then know, okay, I've got these two things to do together. But to me, that leads straight into the downsides of doing this. And that is the fact that actually, not only have you got to think about filing those two things together, you've also going to do it around Christmas. And experience of doing this for 17 odd years tells me no one really wants to think about paperwork and compliance and tax in December and January when they're trying to wind down for Christmas, or wind up if they're in that kind of environment. So that's quite a large downside, is doing those two things together over Christmas. And particularly if you're working with an accountant or you're doing it yourself, a lot of people shut for Christmas. So if you think about it, your deadline's actually been shortened very slightly. So that's to contend with. And while we're on the subject of accountants, you may find, I mean, you'd hope this wouldn't be the case, but you may find if there's a lot of people with March year ends, of course, you're in with everybody else scrambling to get that done with the accountant. So there's a lot of work comes in at the same time. You've also got a point where if you're doing it yourself and you're waiting at the last minute to do all these things, your reliance on the revenues and companies' houses services actually being up and available during that time. Now, in the last couple of years, it's been okay, but there were a few years every year that it would fail, there would be problems, and there's queues to file things. I mean, there's still queues always to file those 31st of March year ends towards the end of the month, but they're not insurmountable. But bear in mind, there can be those tech challenges as well. And for me, aside from the big issue, which we're going to talk about in a minute, the other one is just having a look at this grid now. If we've changed that now to a offset year end, so you can see the company year end runs itself, and then the personal tax year also runs at a separate point. You actually need to sit and look at it at multiple times. You could, in theory, still wait and do these things, but what tends to happen, and I think is a better thing, is always better, I think, to look at these things more frequently, is you could look at it in two different points. You could look at it at the end of your personal tax year, or before the end of the personal tax year as well. So you could even add another review point in. And then you've got the company year end. And sometimes that's quite nice because it's multiple points for you and or an accountant to look at these things together. And it allows a bit of flexibility. And I think the more you can look at these things throughout the year, the more the chances are you actually grab all of the opportunities available and that the flexibility is there. So where things happen where you've got major changes to the economy, or I don't know, the operating environment you're in, a big contract fails, you need to change what you're doing. There's lots of different things that you might move around in terms of how you're paid and the structure of all of that. And having those multiple review points is really going to add that flexibility. Now then, the major downside, all those things said, for me, the biggest piece of feedback we get for clients who are in this area where they've aligned the year ends is they have to pay all the money together. So the payment dates for personal tax and for the company are going to roughly align into the same month. You're going to need the 1st of January for the company would usually be the payment day, and then your personal tax is the 31st of January. So you've got the Christmas period to contend with. You've then got presumably some financial stress in terms of, depending on how well you've planned personally, of course, on paying for Christmas and everything that goes with that. And you've got to find two massive, great tax bills, presuming you've done well enough to pay the success fee that is tax, two big tax bills in and around that area, and that can be a real struggle for people. I think the feedback we get from clients is even if they planned it well and they've been putting a cross tax saving into a different account, or retaining enough money in the company, we've done lots of videos on how you might do that, even then they don't like parting with the cash. They're in one go. There's a stability to having cash in the bank. I've seen clients go from 200 grand to 20, and it's a real jarring sensation, and you lose that bit of confidence sometimes as well. So that can be quite key. Whereas if you had the offset one that we showed you, where you've got the different things, if you had, say, the 31st of July year end, your payment date is actually split. So you've got your personal tax and that's still going to be the 31st of January every year. That's not going to move. And then the company itself, in that example, would be the 1st of May. So, you're likely paying it probably around the late April, just to make sure you get it in on time. So that's quite good. So you can have it split, and you've got the multiple review points and everything else. So there's pros and cons, and you could get 50 accountants in a room, and they're all going to have a split opinion on whether this is a good idea. So this is just me showing you the different options. And again, if I think back to our clients, some of our clients really do like to align the two, and some really don't care. But I think, and ultimately, if you're working with the right people and you're looking at it throughout the year, so like for example, a lot of our clients, we look at these things quarterly, then it doesn't really matter. You can work with either, but personally, I do quite like the offset year end every now and then. It's quite cool. So keep your options open, weigh up the pros and cons, and then you can make a decision to change. If you're working with an accountant, by all means discuss it with them. You might find that actually in your working relationship with them, they've got a preference. You could have some quirky stuff. For example, you might have some clients in the education sector where their school years are running effectively September to August, and you might find you want your year end captured in there because that also, your sales patterns go in with that, or you want it calendar year for similar reasons. So there's lots of reasons why you might actually want to capture a certain period as well, and that flexibility exists. So look into it, have a chat, and then go from there. If you've got an opinion on this, I'd love to hear it down below in the comments. Otherwise, like, subscribe, and I'll see you in the next one.